Okay, so you want to learn how to trade pre-market and after hours on Webull. So the first thing I'm going to show you is how to actually place that trade and what you should have checked on your order in order for it to be available from 4 a.m. all the way to 8 p.m. And so Webull allows you for very quick trade placement. You can either come down here and click on trade, or the best way that I find is you can hover over the chart itself. And let's say, for example, right now we own one share at $7.24. We want to sell at $8. Well, we would just hover over the chart and click on sell in this example, because it'll open your order screen with your limit price already pre-filled. Then you would just worry about the quantity that you would want to sell and make sure that you have your extended hours chosen here, and review your time in force. Now, really quickly, time in force, it means that if you choose day, Webull will open that order from 4 a.m. all the way to 8 p.m. and at 8 p.m. it's going to cancel that order. And so if you think that the stock is going to continue to go up, if you're long the stock and you say, you know what, even though it's at 750 right now, I know it's going to hit 8 at some point, you can choose good till cancel. And so Webull will keep this order open for the next 60 days without you having to wake up every morning at 4 a.m. and pre-fill that order for $8. So let's say, for example, you are really long the stock, you're only willing to take $8. At that point, if you choose good till cancel, Webull will reopen that position every single morning at 4 a.m. for you without you having to wake up and do it manually. So now let's go ahead and click on sell. Now we have an open order, and you can use this screen to modify. You can modify, the price that you're willing to take. You can also cancel your order here. But I want to show you a quicker way and how to do it on the chart. And so the way that you do that is coming back to the chart. Now you'll have an order here placed, and you'll be able to drag this slider up and down. So let's say the stock actually looks really strong. It had some great news in the morning, and now you see that it might hit 8 or higher. You can grab this slider and just very quickly say, you know what, I'm going to bring this up, take advantage of the rise in stock price, and I want 820 now. Well, very quickly, just with the slider, you're able to change that order. Now, the same thing applies if the stock is going against you, or if you see there's a lot of resistance in the stock. So you can very easily grab the slider and say, you know what, 775 looks like a really tough level to break. So I'm just going to bring this down, and I'm going to modify my order and sell at 775 instead of 820 at this point. So you're able to modify that order very quickly on the chart. So now let's go over why you would want to have extended hours available to you. And we're going to use HJLI as the same example. So again, hypothetical, we have someone watching this stock all the way from $12, and they see this sharp decline and they're waiting for a reversal. So what they see is that on Friday, from Thursday to Friday, the stock went from $9 all the way to $10. So if someone's watching that stock and they're waiting for a good point to get in, they're saying, okay, when Monday comes around, I think this stock is going to continue its reversal. It's going to go back to 12. So I'm going to wait for a little dip and then maybe get in before it hits 12. So they buy at 980. Let's just say that's Monday morning. They bought at 980. It's 11 a.m. And by the afternoon, if this person just trades regular hours, their stock would have been down a full dollar a share. So if they bought 100 shares in the morning at 980, by close to 4 p.m., it's already 880. So they're down $100. Well, this person can either sell before the market closes, because they're used to regular trading hours. Or if they have extended hours, they can continue to follow that stock and then see where it goes from there. If they're going to decide to cut their losses at that point, or if we have a huge spike and they want to sell at that point. But in this case, this is an actual stock chart. The stock the next morning actually opened at around $7.20. So if we go back, they bought at 9.80. By the afternoon, they were down $1, so that's $100. By the next day, if they're trading regular hours, they're actually down $270 on that 100 shares. So how could this person have used after hours as a way to minimize their losses? Well, they could have looked at the stock and then followed maybe news, if that's what dropped it. If sometimes it happens, offerings, whatever it is that'll bring the stock price down. They would have looked at this and said, you know what, I was willing to make $8 my most pain target. That's it. I don't want to lose any more than $1.80 a share. And so at this point, they would have seen that it hit 8. At this point, they're thinking, I'm going to have to sell on the next spike. I really don't want to have or own a losing stock at this point. And as soon as it hit 8.50, this person could have sold. They could have placed an order at 8.50. Somebody bought here, so it would have filled. And they would have gotten out with a smaller loss at this point than if they would have waited until 9:30 a.m. the very next morning. And so we're also going to focus on the positive. Now, what if you bought this stock the very next day after that panic sell, and you bought at 7.23? Again, we're going to use this example. Well, at this point, you were looking for a $7.50 price target, which was the first price target here. And the stock hovered below it for the whole day until around 3:30 p.m. where it actually broke. Now, anyone who's trading regular market hours, if they owned 100 shares, they could have taken the position of, okay, this is going to continue to go up, or at this point, I'm just going to sell 100% of my position. I really don't want to deal with having to worry about where it's going to open tomorrow at 9:30. That's regular market hour trading. If you have the ability to trade after hours and you understand it, you could have maybe sold 50% of your position, let's say at your first price target of $7.50, and left another 50 shares to ride just in case. So let's just say you wanted $8 a share and you decided to open a limit sell at $8. Well, you would have been able to capitalize on those 25 shares at $8 here because it would have filled at around 5:30, 6 o'clock that same night after hours. And so you would have gotten a notification, okay, I filled 25 shares. You know what? Let's just say you're still bullish on the stock. I think it's going to hit $10. You could have also opened another order for your remaining 25 shares at a higher point, and let's say you actually did set it for 8.40, then those shares would have filled if you clicked on good till cancel the very next morning at around 5:30, 6 o'clock in the morning. So there is your opportunity to also capitalize on a rising stock because if we look at after that 8.40 mark, the stock actually started coming down again. So if you were waiting for the very next morning to sell at 8, you could have very easily sold at 8 because it actually did open and hit, but you missed out on the rise of the stock at 8.40 in the after hours and the pre-market spikes. So that's why you want to look at pre-market and after hours to be able to trade accordingly as well. And because then you can follow the stock closer without having to worry about, okay, I'm pretty much at the mercy of the company releasing news or, after hours, something happening with the stock market and now it's going to bring everything down. It's not going to open well. After hours allows you to trade without having to now depend on the market opening at that point.